Hey everybody, this is James with WSTrades.com. I want to talk about using the MACD indicator to help you make high quality trades. So what does MACD stand for? It is Moving Average Convergence Divergence. So moving average convergence divergence, or MACD, is a trend following momentum indicator that shows the relationship between two moving averages of a security's price. The MACD is calculated by subtracting the 26-period EMA, or exponential moving average, from the 12-period EMA, or exponential moving average. So it's really just showing you the relationship between two different moving averages here and when they are coming together or when they are pulling apart. So hence the convergence and the divergence there. So how do you actually get the MACD on your chart? Well, if you're using TD Ameritrade's Thinkorswim, which is the platform I've got on the screen right here, you're going to go to the upper right corner of your screen and you're going to click that Studies button. You're going to click the Edit Studies, and then in the smaller window, you've got a little search box in the upper left. You're going to type in MACD, and then you find MACD here, you double click it, you hit Apply, and then you hit OK. So now you got the MACD down here on the bottom of your chart, and you can see the referenced moving averages of 26 and 12 here. So how do you actually use it now that it's on your chart? Well, if you're going to be looking to buy, I would say make sure your security or your stock, whatever you're trading, is in an uptrend. And I kind of pulled back here to where SPY was definitely in an uptrend. This is before the markets collapsed recently and made a move down, just to kind of show an example here. So you've got SPY, it's definitely in an uptrend here. Let me zoom in a little bit more. So if you're going to be looking for those buying opportunities, again, make sure the thing is in an overall uptrend. And what you want to do here is use the MACD to try to tell you when you want to actually buy. So let's take a look at what's going on here. The price of SPY is just kind of climbing. You've got some little dips here, but it's just overall just ripping at the beginning of this chart with some small pullbacks. So here we go. This is back in September. So you see a big, nasty red candle, and that big, nasty red candle there actually pulled the 12-day EMA below the 26-day EMA. So we actually got a cross under here. So the light blue line is crossing below the yellow line. So that is something you might look at and say, hey, this could be a good short opportunity when you have a MACD cross under like that. And you can see after that candle, this thing sold off pretty hard. So this candle here closed at about 345, and this thing moved all the way down to 320. But again, you kind of want to go with the flow of the market. You could take a short trade here, but we were kind of looking to buy. So let's look at when might we buy. We've got this cross under. How do we know when we want to buy? Well, if you see here, things start to consolidate a little bit around this 100-day EMA. Things start to settle down. The selling pressure slows down, and we start to get some buying. So you come to this candle right here. This is October 1st. This is where the two moving averages meet up. And then the next candle, the two moving averages actually pull apart. So you have a crossover. So that light blue line, or that shorter term moving average there, crosses over the longer term moving average. That just kind of shows that the shorter term price action, is starting to reverse. Things are starting to rip. The selling pressure that we recently saw has turned around, and the buyers are essentially back in control. So you can kind of look there, market's in an uptrend, or the stock or the ETF you're trading is in an uptrend. We had a big move down. We had a cross under. Start to look at the MACD for where we cross back over again. And as you can see, once you play off of that candle right there where the moving averages started to pull apart again, that would have been a good long entry opportunity, because this candle closed at $334 and it ripped all the way up to about $354 before it had another nice pullback. So you could have bought in, off of this MACD crossover right here, and you could have held for the long term because SPY ripped for a long time. But if you're really looking to take advantage of all these dips and all of these rips, you can trade it a little more frequently. So that's how you can use the MACD indicator there to make high quality entries for your trades in an uptrending market when you are looking to buy. If you thought that any of the information in this video was useful, please like this video. Please also subscribe to the channel if you're not subscribed. Hit that notification bell. Appreciate you for taking the time to watch this. Talk to you soon.